Alright guys, an update here from the video this weekend. As you guys remember, I told you I had a long position out, and of course, when the market opened, I was stopped out on that position. Very, very small profit, basically break even. You can't really call those profits when the market gapped down. But what I do have here is another opportunity, and I haven't disregarded this. I actually took out another long position here, as the market has found an area of congestion right in this zone. I look left, there's previous resistance right here. Boom. And you can see it. Resistance becomes support, and now we're basically churning inside of that area as the market, had a lot of indecision here over the last 3 hours. Then we get one drive back down into that support level, provides me an opportunity to get long, and I'm playing around here between, break even, down 30 to plus 30, something like that. So there's not a lot of, not a lot happening in here. But, stops are just below this spike low. So if this market continues to roll over as we've seen it doing, it's continuing to kind of break into these lows while maintaining the channel. Remember the channel we talked about. So if the market breaks below these lows here at, 40.13, then I'm just going to get out of it. And by that time we'll probably be looking at breaking the actual channel, the bottom of the channel, and then I'm gonna have to rethink this whole concept. But to me, the market had a really nice strong rally, and then even with all the bad news, has not been able to have any significant pullback. It's just kind of like pause, like, all right, I guess I'll go down if I have to, and forming this little channel on the way down. And my expectation is still that this market do one of these numbers. If I take the ABCD pattern here, if I just go ahead and measure it out, we're coming into a 618 retracement. But if I just take this, sorry guys, if I just take this, drag it up here, let's assume that's the bottom. We're going to come in, we've got more than the 127 to go for this ABCD pattern to complete. So there is room here, but who knows until we actually start to move. Until we break out of the top of this channel, we won't know. So I'm just wanted to show this to you guys and show you, hey, just because you got stopped out doesn't mean the trade's over. It just means that you were wrong initially, and now you're looking for, as long as your initial thesis is correct, as long as all of the pieces are still in place, no reason why you can't re-enter that position. So we'll see what happens with this. And here you go, guys. Here's your initial spike that happens. Let me drop this down to a 5-minute chart here. We can look at it on a little different time frame. You can see now we're retesting that resistance level. Now, I don't want to play around with this, and you never want winners to turn into losses, but you sure don't ever want to absorb more risk than you have to take. And so where our stops were, way back down here, because we didn't know if this was actually finishing, we had a nice double bottom here and then finding resistance back up here. We want to see this market rally from here. If it comes back down, if it breaks the structure here at this base around 140.25, where we've drawn our support level, then at this point, since we've come up and retested that, I'm not interested in staying in the trade. So we'll see if we can get a breakout to the upside, and if we do, then of course this next level is what we're going to be looking at. And if we're back out on the 60-minute, that's really this high around 40.72 is what I'm paying attention to. For this market to really show a sign of a reversal, what we're going to have to see is a break of that resistance level. And guys, this goes back to just basic structure. As we look at the structure levels, resistance, resistance, resistance was not breached. We had a breach here. If you look at this as a resistance level, but we didn't have a break lower. So this resistance level is still technically the one that's intact. Then we break down lower, and we've got a resistance level. And then you got this little resistance level here. And so this is really the first stop on this reversal. If we're going to see the market reverse and show some strength, that's where it's going to be at. And I don't know whether that's going to happen or not, but that's what we've got to watch for. Anyway, I'll be back. All right, traders, let's go ahead and talk about what's happened here since the last little video we put out. I keep getting beeps in here. Good grief, somebody's private messaging me. Let me hang on a minute. You guys are in the you guys are in the Trading Underground chat right now. Let me put a hang on. Recording a video inside the Trading Underground chat room. Won't put that out there. Now, back to what we were talking about. Now, last time I was here, we were looking at this level. That level did get violated, and then right about here, we put in this nice little reversal candle. You see right there. When that happened, just to give you the progression of the trade here, I moved my stops to break even, so I could protect it. Why? Because we put that in short of the next resistance level. Just keep looking left, guys. Boom. This one gets violated. Where are we likely to go? Boom, right there. Where did we get to? We didn't quite get there, and then the market pulled back. So I rolled my stops to break even. Now, when we're looking at this and this market is pulling back, where are we likely to find support? Look left. Again, structure leaves clues. This is exactly what I'm going to be talking about in the training on Wednesday, the free training that we're doing. If you haven't had a chance to sign up for that, please do. All you got to do is on Trading Underground, just go to the event area and just sign up. It's free, and we're going to be talking about this very thing when we get in there. Now, we came down into that level, and then we rallied off of it. Now, once we rallied off of that and that proved to be the support level, I went ahead and took the lows and subtracted 5 pips from it, and that's where my stops currently reside. Into a profitable trade now. Currently, we're up about $275, $290, somewhere in there. What I want you to recognize here, guys, is the structure and how clearly structure leaves clues as to where the market is going and when. We're now coming back up. We're going to retest these highs. We're going to need to see a break of this high right here in order to get confirmation that this market intends to go higher. And look at it run. Boom. Support. Wham. We get a rally off of those lows. Now, we can't move our stops. Our stops have to stay where they are. Why? Because here's the previous low area. Here's the previous lows. And we cannot be in a we cannot take those off until we put in another cycle bottom here. So we'll be watching that as well. Now, we're running right up into another level, aren't we? And so we've got to be cognizant of this. There's the high. There's really the closes of the candle. So we're right up into it now. If we get above this area, the next level that we're going to be looking at is right here. And this is really the level that we're watching, because if I go out to a 60-minute chart, let me pull this up for you guys. If I go to the 60-minute chart, you can see we put in a low, then the market churns in here. We haven't taken out the lows, which means that this is really the high, 140.84, somewhere in there. So this is really what we need to see violated before we know that the market has an intention to go higher. Now, if we get up there, we have $600 or something like that, and we're not going to want to just sit on that. So what we're going to do is take off half of our position right there at 40.83. So I'll just go ahead, place that sell limit order, and we'll cut it down so that we take off half of our profits if we get into that zone. And I want to make sure I get filled. I'm not going to get greedy with it. So I'm going to take it all the way down here so that I know if the market spikes into this level again that I'm going to come off. And look at it run. There we go. We're about to get our profits taken off. About $400, $500 now, $480. Levels violated, levels violated. Now we're waiting. We got to be patient. Have to be patient. S&P rallying as well here. And I'm just stalling here, guys, to see if we'll actually spike up and grab this first target. It'll mean about $250 in profit if we do get there. And then I want to talk to you about structure. So, again, I'm just going to give it a couple of minutes here. But actually, I can talk about the structure while we're doing this. But I want you to pay attention, guys, to exactly what happened over the course of this trade. And I'm just going to grab my line tool, and I'm saying, here was the support level, basically where we looked at getting long from. We looked at it on a different time frame, but this is basically it on the 5-minute chart. The market had rallied and put in a high. Right there. I'm a little bit above it, but just, bear with me. Then the market pulls back. We retest it. We've gotten long. Now what are we first looking for? We're first looking for that level, because that's going to be the key level that tells us whether or not this is just a consolidation before we roll over, or whether we're actually in a position where the market could go higher. In this case, boom, we get the rally. And we put in another high here. We'll delete this stuff because we don't need it anymore. We put in another high right there. We don't quite break these highs. And then the market pulls back. Where do we pull back to? Look left. Structure leaves clues. Again, exactly what we're going to be talking about on Wednesday. Market finds support, rallies, retests that support, still finds it. Now, what happens then? The market goes bam and explodes. These were buying opportunities, loading the boat, smart traders getting on board before what? Wham! The market explodes. We breach this high. We breach this high. Where do we need to be looking now? Where's the potential area? Right here. This is the critical area right here. Why do we know that? Well, we know it not only because it's the next level on our 5-minute chart, but if we go out to our hourly chart, you're also going to see, as we just talked about, a major level there. And this will be, guys, the turning point. If the market gets above that level, we're going to retest trendline resistance. We're going to take off part of our profits there. That way we've got some money in the bank. We've already booked some. We're already going to guarantee ourselves a profitable trade, although it won't be very profitable if we get stopped out. But the market now is short of our target. We've not come up into the resistance level yet. And so what we would expect is after this long explosion up is that we get a little bit of a pregnant pause here before we retest the zone. But guys, what I want you to get out of this is you don't have to have a bunch of fancy indicators on your chart. You don't have to pay. You don't have to have some whiz-bang trading system. Those are extremely valuable. I mean, I do that in the education business. We have those, and those can be very, very valuable tools to you. But again, you don't have to have that. If all you understand, if you've been educated on language of the market, if you've been educated on, and your knowledge base is good on market dynamics and market structure, then you can trade off of that. Where's this market likely to pull back to? Where's this market likely to pull back to if it does? Look left. Structure leaves clues. High probability we're going to come right back into that level there. Why? Because that was previous resistance and held there significantly. So if this market does pull back, it's going to probably pull back right into there. And if it does pull back into there, if we do one of these numbers, boom, and then rally, guess where our stops get to go? Well, now our stops get to roll to right there. And we're going to protect even more of our profit. So we're going to take off half of our profits and we're going to protect the balance. Now, if the market just goes straight north, we're going to take off half of our profits, but we're not going to be able to roll our stops because the market didn't give us a place to do that. So we'll have to watch and be patient and see what this market does. But this has been an 8-minute video. Let me go ahead and pause it, and we'll come back after the market does what it's going to do. Well, there you go, guys. It wasn't but a couple of seconds after I stopped the video that we hit the initial targets there. And now the market has retested that resistance level and pulling back here a little bit. Now, I would expect, the logical stop for this thing is back here, and we'll have to wait and see what happens. But we have come off half of our position, about $250 in profit there. The balance is in a profitable position way back down here because we have to respect our structure. So we'll see what ends up happening here, if this market can actually breach breach these highs on the new structure highs or not. And if it can, then of course we'll be looking at making even more money on this trade than we already have. And I say the proverbial we. You guys, of course, catch this after the fact, but I do this for training. I do this so that you guys can begin to understand the thought process, and not only that, but see the discipline and the clear line of thinking that happens when you trade. And for many people, it's a massive confusion and frustration and emotional turmoil, and it doesn't have to be like that. Some days you come in, you make good money, some days you don't make anything, and other days you lose money. But all you got to do is just keep coming back to the market. Keep coming back. And you keep your trading size small. I mean, this is, a $500 move here, for some of you, that's astronomical. For some of you, that's a huge amount of money to make. If that's the case, then don't try and trade like that. Don't be buying single lots. Buy mini lots. Buy micro lots. Maybe your $500 move is a $50 move. Okay, perfect. No problem with that at all. The important thing is that you're following a set of procedures, you're following a set of rules that are going to ultimately help you to become profitable. And this is just a perfect example of that. And I'm going to continue to watch this trade. I'm going to produce this video to get it out to you guys, but I'm going to watch this, and I will update you when the trade is complete to show you guys, how it ended up playing out and what ended up happening with it. But it's just again another example of a trade, a real-time trade that you guys get to see and feel and be part of. I'm liking doing this. If you guys are liking doing this, you guys like the fact that I'm doing this, give me post something at the Trading Underground on this under the video, and just let me know, hey, I'm finding this really valuable, or I'm not finding it valuable. I wish you would be doing X, Y, and Z differently, and I'll try and put together some stuff that will really be of benefit to you. So anyway, till next time, guys, good luck and good trading. My name's Jason Stapleton, and this is the Trading Underground.